welcome to our second podcast. This is the Market Masterminds. We are here today hosted with our managing partner and chief analyst, Aaron Eitenbrook.
Fearless leader. Let's make sure we call him.
Yeah, absolutely. That goes without saying. Anybody that listened to the first one knows that that's in the title structure.
And who pulls off the bald look as good as he does. Let's be honest.
That's no shade thrown at you, Jeremy.
Yeah, it's okay. Yeah, I'm conflicted. Like I sometimes try to grow hair, and then other days you just get rid of it. So yeah, so along with Aaron, we've got Chase Pals, one of our business partners here at I-10 Research, and myself, Jeremy Hamp. Excited to be back and looking forward to today's chat. We're going to go through a couple of different things today. We're going to talk about utilities in the utility sector, some work that Aaron called, 5-6 weeks ago. We'll go through that performance. Hopefully you took his advice. We're going to talk a little bit about NVIDIA and their earnings report that recently posted. And as always, we are on YouTube. We are on Substack. We encourage you to go out, check us out, check out the work that we produce, the work that we do. Subscribe, like, buy, ask questions, whatever your heart desires. But we are here to absolutely show you market-leading research and analysis, and hopefully give you an edge as you look to produce for your clients, for yourself, and just bring about overall perspective and where the money is in the market and what that money is going to be doing. So without further ado, we're going to jump in today, and we're going to get into I-10 IQ's sector opportunity reporting. And as mentioned, we are going to focus a bit on the utilities sector. So Aaron,
hey,
one of the products that's produced and delivered focuses on sector ETFs and sector opportunities. So kick us off. Talk with us a little bit about what your approach is and why there's so much value in the analysis approach that you take and the work that you produce.
Well, specific to the sector opportunities, the sector opportunities and the opportunity alerts are born out of the standard weekly sector ETF tactical report. The sector ETF tactical report is covering all the S&P sector spiders. So it's a 25-page report, comes out every week, and it's a full analysis of each of those sector spiders. Where are the important key levels to look at buying or selling, or if it's in a spot where it's not advantageous to do either, and compares all of the sectors to SPY, the S&P 500 benchmark, and to each other, and looks at rotation to see what sectors are coming into favor, which ones are moving out of favor, and makes calls and recommendations based on the conjunction of all those together. And that's how the opportunities and the opportunity alerts come about.
Why would I want that though over, anything else? I mean, you're talking about, a model specifically around volume at price. So the folks that are listening, right? They don't know, right? Some of them might, right? Because they're educated or they're actively trading, right? And they're in it on a daily basis and they've seen your stuff, maybe seen your stuff on Fox Business or elsewhere, but what's the real catch-22? Why is volume at price better?
All right.
Well, he got charts out. Everybody. Watch out.
Let me so this is, I'm going to show you the sector ETF weekly tactical report. This is, you can see from April, or one of them that came in April. In this report, I'm analyzing communication services, consumer discretionary, staples, energy, financials, healthcare, industrials, materials, real estate, technology, and utilities, all via their S&P sector spider ETF. So in each of these, for each of these symbols and sectors, I'm doing an analysis using volume at price. We can talk about this. Volume at price is the primary methodology that I use and have used for decades to make trading and investing decisions and to provide trading and investment guidance to portfolio managers, hedge fund managers, and others that have sought me out to do exactly that. Volume at price is this red histogram that you're seeing on this chart. The application of these, or the skilled application of volume profiles and volume histograms on price charts, can reveal important information about what prices have traded and have the most trades, where liquidity is, where liquidity isn't. And the big money that's in the market has liquidity needs for the kinds of things that they do when they're buying and selling. And understanding that and knowing where the volume is and where the liquidity is allows a person or someone who is like me that understands this game, understands what that means as far as analyzing what price is likely to do next and where price is likely to go. So back to this report.
Yeah.
I'm doing a volume at price analysis for each of these sectors. I'm looking at it on a shorter term, which is a daily perspective, looking at a bigger picture, a weekly perspective. And then I'm looking at this sector versus SPY. SPY is the S&P tracking ETF. And the reason to do that is because there are a few different applications of these sector ETFs. You can invest in a sector ETF if you want to have exposure to that sector because you think it's going to go up. There are portfolio managers that I advise that they're invested in all of these sector spiders,
right,
such that they're effectively creating an equivalent to an SPY investment. If you buy the SPY, you have all the sector spiders.
Yeah.
If you buy all the sector spiders according to their weight in SPY, you also have SPY. Well, this report is to support those portfolio managers that are taking a collection of these ETFs and allocating so they have almost a SPY representative portfolio, but then based on the analysis, they're overweighting the sectors that are favorable or that are forecast to outperform SPY, and then they underweight or eliminate the sectors that are forecast to underperform or do poorly versus SPY. And the objective there is to make a performance line that when the benchmark is SPY and SPY is, ticking upward, their portfolio performance is on a trajectory that's a little bit steeper than what they see on SPY. So they're trying to create that outperformance, that alpha to SPY. So go ahead.
Yeah, I got a question. As mentioned at kind of the top, there was a report that you produced back in April, and there was a call that you made on one of the sectors that what was it? How many years? 7, 8 years, something like that, since it had
made any move,
held that number one position across all
well,
the sectors.
Right here, the utilities sector.
Yeah.
And utilities is traditionally a pretty defensive sector, and is not generally a top performer, top performer amongst all the sectors. All the sexier technology, communication services.
Yeah.
These are the ones that we're going to talk about NVIDIA. Like
Yeah.
NVIDIA is not in
She ain't shiny.
utilities.
She ain't the shiniest bell at the ball,
But that being said, through the month of April, what I was looking at and calling out in these reports is the position of utilities versus SPY, and looking at the rotations of money moving, into and out of these sectors, and then doing the straightforward analysis on XLU and what's important. And the call that then I rallied from this report into a specific sector opportunity report was basically saying, hey, here's all the XLU related data and information from this report, saying that a move above this 6670 level is going to position XLU for a large degree move to the upside. And it's got a couple of spots here that are the next in line spots. So that was on the 25th of April. That this report, and then the sector opportunity report for utilities was issued. And then I guess the rest of that story is that
she cranked.
Yeah, it rallied from this middle 60s area and is tagging and touching into the 72s now. So and from a sector performance perspective, that puts it as one of the top performing sector over that earlier period. And not too shabby. That's like an 8%
I was going to say
upside move, and that was largely in the course of the 3 weeks following the call. So 8% in 3 weeks. That was good.
I'd take 8% in 3 weeks. I don't know. But
we've seen we saw this little pullback here, and now it's moving back to the upside. I don't know if you're keeping an eye on the stock indices and what's happening in the stock indices today and yesterday. But this has not been a great week in the stock indices. We're seeing a pullback here. And the last couple of days that the indexes have been pulling back, XLU is trudging higher. So it's showing more resilience and maintaining its outperformance versus SPY. And that's what that sector research is designed to do and uncover. And that's why,
that's why we do it.
smart people do smart things when presented with good information to do so.
I think, and proof's in the pudding, right? Like, I mean, I think this is just one of many, right, examples. We could go back digging through all the reports over the last, 10 plus years. And how many individuals have been benefiting from this because they were paying attention on who to look for. The moment you left, the market working for other people, right, and left New York working for other people and started out on your own, I mean, the smart ones followed, right? And they're the ones that have been benefiting for so long. So now, if you're paying attention to the podcast, you're paying attention to the Substack, you're paying attention to any of the emails, texts, calls, conversations that we're having with you, you're going to start to reap some benefits if you just hit that like and subscribe button. And I'm gonna not knock on that like and subscribe nonstop, because the information is only going to continue to get better coming from Aaron as everything progresses and we get into the kind of the crazy months, which are coming up, and everybody knows what happens in November. So we're going to keep seeing crazy, and you're going to want to have data-driven, not opinion-driven results as we move through that. So I'm excited about it.
Yeah. Well, Chase, and we say that a lot, but I think it's worth just emphasizing that there's two parts when we say data driven. The 100% that is critical, that the research that we're producing and putting into the marketplace is using 100% market generated information to come to the conclusions that we're putting out there. It's not predicated on my view, your view, or somebody else's view of information. It's data, and it's crunched through a rigorous process that I've used in real trading for decades, and so have others, that allows us to put forward research and actionable guidance that is not, hey, we like this, hey, we like the stock, you should buy it.
I'm friends with the CEO. Go
well,
pick it up.
I like the stock thing. That's also kind of a nod towards the whole meme thing. I think the GameStop.
You're gonna dodge
GameStop thing. The pump and dump stuff that was going on with trying to short squeeze or successfully short squeezing in GameStop. The guy was getting some flack about trying to manipulate markets and trying to do this, and he fell back to I just like the stock. And so then that became a funny meme, like, I like the stock, like, don't prosecute me for anything, I'm not trying to manipulate anything. I'm not trying to get a whole gang of people together to do something crazy. I just like the stock.
I might have done that, but
so all that to say, that's not what we're doing. We're providing real analysis and info.
I never made any money from GameStop during that time period.
So one thing stock related though, it is a place that we've expanded, and I'd love to get your insights here, Aaron. AI is a buzz. AI has been around for a long time, and I think we've talked to a lot of people, and folks want a quick answer at times, right? They want quick guidance. They look for trusted opinions. We talk about that here at I-10, that again, we're data driven. We are doing our work based upon, again, market data and AI, right? Hey, go out, tell me, AI, pick me a stock, tell me the great thing to go buy. What's good, what's not good. We do some work in the symbol space, right? But it's a little bit different than just saying, hey, go pick this stock. One of the things that we hear from clients all the time is, I'd love to do more, I just don't have enough time.
Right.
And you really kicked this off for I-10 several months ago. You vetted numerous platforms, numerous companies, providers of AI solutions, AI software, with the intent of not telling you what to go do or not do, but rather, how do we take 150,000 news sources that are saying something or potentially saying something about a company, about an event, about something going on across the globe, and the intent was, how do we make that consumable? And one of the cool things that we've done here at I-10 is we have a new product that makes those earning call summaries and the time investment that's required to go in, listen, read, analyze, go back in time to see what had happened previously, what was talked about previously, and ultimately put this together in a quarter over quarter summary that makes it consumable and digestible, and takes what would be, who knows, hour and a half to 4 or 5 hours worth of time on a single symbol. And we put together a 15-page report that somebody can go through in 10 to 15 minutes time, understand last quarter, understand this quarter, what's new, what's changed, what's the same, and Tell
Yeah.
us about this. Show us. We recently put this out for NVIDIA. NVIDIA's the
Yeah,
buzz,
yeah.
taking the market by craze. So let's jump into that piece.
Yeah. Well, something that's worth calling out, and you said it, but this explosion of AI is significant. However, it's not magic. It's not a genie. It's not a fortune teller. It's a tool. It's a technology, and being able to apply a tool and technology to what it's built to be able to do, or what its capabilities are. If you don't understand the first part, you're not going to be able to understand what are the use cases that this is appropriate for, what are the things that this can deliver for me.
Right.
And that's the route I went down, as soon as this AI stuff started, rolling out, was building an understanding of what is it, how does it work, what is it doing, and then understanding that steers towards, here are the applications and the use cases that are appropriate for this kind of new tool, new technology. And you said it, time savings and language-based consumption of information and material, and then summarization or guided analysis. All of that is great. What I'm sharing right here is NVIDIA quarter-over-quarter earnings analysis. So we can do this for any company that produces earnings, and we have the AI generate a call summary for the current earnings call, and then do a cross comparison of last call, this call, and look at it through a few different lenses. What are the common remarks between the last earnings call and this earnings call? Because that's important. The company management will be talking about what is driving the business. What are these forward-looking statements? And we want to know, are they delivering on those things? Are any of those things changing? And that goes to the common remarks and dropped remarks. Again, key information that the AI can pull out and put in front of me, saving me, hours and hours of, listening or reading time to get this information. And then obviously new things, like, and especially in the case of NVIDIA is an innovation. They are innovating new things, like the stuff that's in here. I dug in a little bit further to just, get some additional understanding around some of the cool stuff that they talked about in their earnings call. And yeah, you need to be able to know all of these things, and having something that can do this kind of work for you saves, hours and hours of work.
Yeah.
And then compound that over how many companies would you do this for? A lot of people don't follow earnings, or, even portfolio managers, they don't follow these earnings the way that they ought to, because they don't have time. Nobody has time to sit around and just read earnings reports. They have businesses to run. They have clients to meet with, all of those things. I never did this kind of exhaustive stuff before I had an AI that could help lighten the workload to do it. But
You
yeah,
remember,
this is
we were having a conversation a month ago or so with one of our clients, and showing this individual what we were doing here, and getting his sentiment and getting his feedback, and his response was, to your point, I don't have the time. And we started showing him this, and he said, oh my gosh, now you're actually going to cost me time.
Right.
It was the flip. And we said, tell us more. And he said, this is consumable. It's easy to pay attention to this. I can get through this. His point wasn't ingest. It was, I'm happy to spend the time if it's valuable, and there's something I can use from it. Right. And this is what we do. This is what we produce for our clients. We make sure it's an effective use of time that gives them some opportunity to learn, to understand, and again, potentially go make some decisions.
Yeah. Well, and the thing that I left off, sorry, I'm cutting you off, Chase.
You're good.
Go ahead. I'll say my thing.
Well, I just, the people may not be following, these groups that closely, but NVIDIA, OpenAI, Anthropic, all of these, we're starting to see some personnel shift too. Like on the people front, which also has impact into things. Jan Leakey, I'm not probably butchering the last name, but was the former safety leader for OpenAI, is now over at Anthropic. I think that move happened like a couple weeks ago when it went live and official, or a week ago maybe. And so I think that if you don't have enough time to sit through an earnings call, that's fine. Don't. But get a good summary comparison quarter over quarter. I'm sure there's people out there that do them, but I don't think anybody's doing it like we are. Not that I've found so far. And I think there's, to your point, right, incredible value, but it may cost you more time. You may be hooked.
Yeah, if you're not looking at anything, if your time invested is zero, there's only one way that's going. But think of how much better informed you will be.
Well, and while you were scrolling too, like that, I don't know if anybody was paying, if they were paying attention, they're going to see it, but there's sentiment added in here as well, right? Like there's sentiment from our AI and from us on like, is this positive, neutral, negative? Like,
yeah.
so
well, and the other thing
just
that I left off,
statements.
yeah, and I left off the part, the other thing the AI does, it understands the business, for each company that we run, it
Right.
understands the business sector, sub-industry that the company is in, and it will take and grab the influential peers for that company, and then it will generate the key information around that influential peer, their performance highlights, and the potential impact on the company that we've told it to do this analysis on. So,
Right.
The influential peer performance highlight and impact analysis, that's another thing that, again, human is fully capable of doing, but how much time would that take to
Hours.
it would take a long time. I mean, now you're talking about, three of the additional primary competitors and doing earnings call research on those just to pull into this kind of report of how might that impact this. But again, because these are language-based things, these are things that these large language models and the AIs that we are leveraging, they are very good at that. So we're using their strengths in that regard.
I love that. Any thoughts on call out for NVIDIA? Anything else? I know we talked about touching on it, but honestly, like, I mean,
I'm gonna do more screen sharing.
Got an opinion? More charts, baby. Charts on charts on charts. I think I'm gonna start flashing charts up here, like on the screen in post when you start to go to share screen from now on. We're gonna make that happen.
Well, so this is NVIDIA.
Yep.
Right here. And a couple things to call out. Like this run up, this is the beginning of 2024 here.
Right.
And this run up here that started at the turn of the year, just for, you can't see it on here, but if I back this out to a weekly analysis, you see this giant volume at price accumulation that then we broke out from. That was a signal, a massive signal that this is headed higher. So that's what we saw. It ran all the way up, almost reaching 1,000, which, from a level of psychological significance, 1,000 is definitely that. Went into some consolidation, pulled back to the first big, the first volume accumulation that was down here at 787. You can see it gave a couple opportunities there, and then it was off to the races again, and it broke 1,000. Trading as high as what, like 1150 up here. But that being said, we're seeing some pull back and pull off of those highs. This is coming to close this gap right here. So this is a key spot to look for and look at. I think it's at like 1065 or 1069 in the upper 1060s is where that's at. So that's a logical place for looking for some support, looking for big money to maybe come and reassert themselves here.
Yeah.
But even that being the case, even a pullback that comes down to 1,000 is not going to negate the overall upward trajectory that we have going here in NVIDIA. And, for what it's worth, we'll see if this actually works. I'm going to expand my share and just
Well, it's
talk
a
a little
pretty
bit
wild
more.
run, Aaron, in a less than 6 month window. Like,
Oh yeah. So
hold up.
that's what this is. So now check this out. Check this. Each of these, this is Microsoft in the upper left,
Yep.
NVIDIA in the top middle, Amazon on the upper right, Apple on the lower left, Google on the bottom middle, and Meta on the bottom right. And each of these has a 0% starting at the beginning of this year. So you can really quickly see what have these guys done over the course of this year. Microsoft went from 0% up to plus 15%, back down to 5%, back up to 15%, and now back to up 10% on the year. That's Microsoft. Look at NVIDIA, bro.
It's nuts.
Starting at 0, went up to basically up 100% at that peak, chopped around and chopped back to, up 60 something percent, and then surge up to 140%, now pulling back to up 125% on the year.
Jeez.
That's crazy.
So wild.
Amazon, you can see what's happening here. It surged up, plus 25%, but then has been back and forth, down, back to down, up only 15%, back up to up 25%, and now back to up 15% again. Apple's been the laggard in this group. I mean, check out how, Apple's great. And really, the lackluster start to this year came, at the time that, the rest of these guys were all surging higher, and everybody's like, Apple missed the AI boat.
They did.
And then I think that, middle of April, everybody's like, okay, I don't think Apple's going to just miss the AI boat. I think they're actually, they'll come up with something.
Well, I mean,
And,
that's their modus operandi, right? Like they move to the market second. But
well, and if you look like from minus 10 here to, what is up 2.5, I mean, that's 12.5% since middle April.
Right.
If you look at middle April for Microsoft, it's from, from here to there, I mean, given this pullback here, like look at these last couple of days. This is the other interesting thing. This is each one of these bars is a daily chart. Look at Microsoft fall out here today and yesterday. And then like look at Apple yesterday and today. It's kind of just chilling. NVIDIA's got a little, it made a new high and then pulled back, and now it's pulled back a little farther. But yeah, it's interesting. This is the kind of the performance evaluations and things like that, and volume at price analysis. That's what we're about. That's what we're about here. We pay attention to these things and we talk about them and we bring them to our clients, because not everybody likes to sit around and look at all these charts all day long and run volume analysis. But I do. So there you have it. You need a guy that does a thing for you, this kind of thing. I'm your guy.
We know a guy.
That's right. No, that's awesome. The insights were fantastic, and certainly appreciate you, sharing the value as to why this is the approach for I-10 research, why this approach matters, right? It's data-driven, it's fact-based, there's no opinions, there's no conjecture, no pontification, right? It's just data. Data doesn't lie. So, yeah, appreciate it, man. Always good to hear what you have to say. Always appreciate the education. A great way to spend a Friday afternoon, in my opinion.
Agreed.
Yeah.
Agreed. All right.
So for everybody that watches this, Chase,
Yeah.
I'll let you wrap here next, but the next earnings season is right around the corner.
Right around
If
the corner.
you want to engage and have some, get into something that you are not doing that maybe you've always have felt like you should be doing, our earnings call stuff is exactly the manpower assist that you need.
Yep.
And then secondly, we talked about sector opportunities. If you don't know, Jeremy, you and Chase, you guys both know there's a new sector opportunity out there.
Yes.
Actually,
Yes.
to be, to be a truth teller, there's a new sector opportunity that's out there. You can go to i10IQ. You can find out about it right now.
That's right.
That's all I'm going to say about that. I'm just saying. I'm just
Oh,
saying.
I love it. I love
It's
it.
there.
It
is
there.
there.
It is there.
For the
That's-
taking.
And all you got to do is like and subscribe to the channel, share the show with your friends, go to Substack, i10IQ at Substack, subscribe to our daily commentary, and subscribe to our reports.